Hello and welcome. You're watching Countdown right here on Bloomberg Quint Live. Markets a bit subdued in trade this Friday afternoon. Nothing much is happening on the indices, trading absolutely flat with a slight negative bias. The headlines for the afternoon. Bank Nifty shows signs of consolidation after touching 30,000. Benchmark indices give up morning gains. The rupee is set to post its sixth straight week of gains as fund flows continue to come into India. SpiceJet is trading with gains of 8% after the airline confirms that it's speaking to lessors to take over some of Jet Airways' grounded airplanes. And oil marketing companies are amongst the worst Nifty performers today after crude prices continue to hold ground. Good afternoon, Neeraj. A slightly more somber day of trade this afternoon, last trading day of this truncated week. But nonetheless, even with a negative print, you may see a positive weekly close. You would rather.
Yeah, and maybe not unexpected as well. I don't think too many people, as you yourself would have said, that would not expect there being a crash landing in today's session, but a bit of a pullback in today's session for sure. Enough and more stocks though doing well, and if we just pull up the mid-cap and the small-cap indices once, not that the indices would be showing that dramatic moves because they too would be lying flat, and maybe the market breadth would still be pretty similar to what we saw day before yesterday, which is the declines higher than the advances. But there are enough and more pockets of stocks which are flying high in the session, which is always good to know. It shows that there is excitement in the market. The volumes would be high. Interesting to see what the FI flows look like, but interesting. The contributors is one thing, but the volumes is the other thing. And again, cash market volumes at close to 24 lakh, which means that we'll nudge the 30,000 crore mark reasonably easily, I would presume. Just very quickly, the heat map, but before I hand it over to Devina for what's happening across the broader end of the spectrum, and just a bit of a recouping from the start, wherein there were very little reds and a lot of green. Now even Stevens and some stocks, heavyweights, we were talking in the morning about how heavyweights are not contributing. Reliance Industries is soft, about 1.5% lower in the session today, and that plus the FMCG losses plus HDFC Bank in the red explains why there is pressure in the markets in the session today. A lot of private financials too have gone down. TCS is down about 1%, but gainers include L&T amongst others noticeably. NTPC about 3.5% higher, and that's only gone from strength to strength. Today it's been a trending day for NTPC, and that's the remarkable thing. As the markets have progressed, NTPC slowly moved from strength to strength, and therefore not very volatile, but a trending move upwards, so that's a good thing. And selectively, we're having some banking names, save for HDFC, the likes of StockAxis, etc., doing well. ICICI Bank to 1/3% in the green. Now, what about the broader markets?
Well, the broader markets are also having, a slightly more calm day today. It's a day of consolidation that we would rather see on the broader market space too, and you should have the stocks up on your screens with the kind of moves that we've been seeing on the Nifty mid-cap space. So while it's down just 0.1%, real estate as a pocket is extremely active, and this has been the case in the last 3 or 4 trading sessions. I'm going to start off with Prestige Estates. This week itself, by the end of trade today, we'll get to know the weekly performances, but Prestige Estates has already this week put on about 32% odd. Oberoi Realty 4% odd higher, missed out the action on Wednesday's session, but is catching up right now. Castrol India, GMR Infra, Jubilant Foodworks are some of the bigger gainers. Amongst the losers, Dilip Bilkon looks a bit more soft today, some profit taking of the table, 4.5%. Emphasis continues to reel under some amount of pressure. Graphite India is down 2% along with REC, which loses about 2% as well. From the small cap space, I'll just quickly pull that up as well. So while the mid cap index is down 0.1%, 1/4% under for the small cap space. Jet Airways, though, is taking a comeback in today's session, so about 4% odd. Reliance Communications, third straight day in a row, post the bailout by older brother Mukesh Ambani. So the entire group stocks are doing okay. And 9% on Arcom. J&K Bank's up 2.5%. Venky's is up 2%. Amongst the losers, you've got Indiabulls Real Estate down 3%. KC International, First Solutions, these are looking slightly more weak in trade this afternoon. Taking a look at what's been happening in the futures and options space, more liquid universe. last trading day of the week. Agam, what's the trend looking like?
Well, subdued cues coming in from the benchmarks. A little bit of an expectation though, considering this is towards the end of the week and we have already had a truncated one. So we really aren't seeing as much traction when it comes to futures and options space, save for perhaps a little more increase in open interest for the benchmark futures. The Nifty does see a 4% increase there, and the Nifty banking index is continuing to see unwinding coming through with a decline of 2.5%. The India volatility index also largely thereabout, so we really haven't seen too much change in the India volatility index, which should come up on your screen. We have seen about a 3% gain, but it's still around the level of 16.5. And moving on to your change in open interest, because of the fact that the Nifty's come off and gone below the mark of 10,500, we're starting to see a little more writing around the 11,600 call and a little more writing around the 11,500 put, despite the fact that the Nifty currently trends below that particular mark. And now in terms of stocks, we have Coal India, which is looking at fresh shorts with a 15% increase in open interest. Besides Coal India, we have a lot of traction in Jet Airways, but this time we're seeing short covering with its underlying advancing by 4%. And moving on from Jet Airways to NTPC, fresh buying coming through with 13% increase in open interest. And we also have a lot of traction in Reliance Capital, where we do see 3.5% cut in its spot price, with 16% added in open interest, indicating fresh short positions in this particular counter. So as expected, mixed cues coming in at this point in time.
Right. Agam, thanks a lot for that. That's the quick F&O wrap out that we have this afternoon. But one pocket that has been grabbing eyeballs of late has been the entire aviation pocket. Remember, Wednesday, you had the passenger the air passenger traffic numbers that came out at a 59, the slowest growth rate in 59 months, came in at 5.6%. But SpiceJet has navigated through all the turbulence in the Indian aviation industry to emerge a notch above the rest. For the first time in over a year, SpiceJet has clocked in higher passenger growth than the market leader Indigo. Sumit has gone through the aviation sector data released by the DGCA to find out what else changed in the month of February. Sumit's here with us to give us a brief outline of what works in SpiceJet's favor. Sumit.
So if you see, as you clearly pointed out, that SpiceJet has reported a higher passenger growth rate compared to the market leader, that is Indigo, for the first time in the last 14 months. And it has been able to do so in a month where the industry passenger traffic growth was the slowest in nearly 5 years. As you can see here in the month of February, in SpiceJet's passenger growth rate was nearly 17%, while that of Indigo was close to 15%. The industry passenger growth rate was 5.6%, which was the lowest in the last 59 months. So despite this, SpiceJet has reported a good passenger growth rate in the month of February. Now, this fall in industry passenger growth rate was because of two reasons. Firstly, it was the flight cancellation. Second was the higher fares. Now, flight cancellation was because of three reasons mainly. Firstly, Jet Airways flight cancelled because of the grounding of aircraft that we had seen in the month of February. Now, the company had grounded nearly 19 aircraft in this month. For Indigo, they had cancelled nearly 30 to 40 flights on a daily basis starting February 12th because of pilot shortages, while in Mumbai and Bangalore, flights were cancelled because of runway shutdowns. Also, higher fares was one of the reasons why the passenger growth rate was the lowest in the last 5 years in the month of February for the Indian aviation sector. Now, if you see, for Jet Airways, on the operational side, there are more troubles that the company has seen. In the month of February, the passenger growth fell to nearly by nearly 28%, and this is the biggest fall that Jet Airways has seen in its passenger growth in the last since they have started their operations. And also their market share, that has come down to 11.4%, as the lowest level reported by Jet Group since they began their operations. Now, on the passenger load factor, that is the capacity utilization for Indian Airlines, if you see there, compared to last year, all the passenger load factors for all the major airline companies have dropped, but compared to last month, if you see, the passenger load factor has improved for the airline companies, and that is because of the flight cancellations that we had seen. Now, compared to last year, if you see, SpiceJet's passenger load factor was down by nearly 230 basis points, but still this is the 46th month where the company has been able to report a 90% plus passenger load factor. For other players like Indigo, Jet Airways, Air India, and for Vistara, the passenger load factor declined in the range of around 100 basis points to 340 basis points. While on the other hand, for Go Air and Air Asia, the passenger load factor did improve by nearly 200 to 380 basis points compared to last year. Lastly, in the market share front, if you see, the market share for Indigo has improved to 43.4%, while that of SpiceJet has improved to 13.7%. Jet Airways, as earlier pointed out, the market share has come down to 11.4%. Now here for the Tata Group owned airline companies, that is Air Asia and Vistara, the market share has improved to 5.1% and 4% compared to last year, while that for Air India, it has come down again a notch down to around 12.8% in the month of February.
All right, Soumit, thanks very much for that. That is the landscape of the aviation space right now, and what is tipping the scales in favor of SpiceJet. Moving on, VG Siddhartha will first raise 3,000 crores via non-convertible debentures before selling his stake in Mindtree. The Cafe Coffee Day promoter needs to free his pledged shares before he can sell his 20% stake in the IT company, and that's intrinsically linked to Mindtree's share price. Sajit Mangat now joins in with more details on the same. Sajit.
That's right. As part of his strategy to deleverage his group, VG Siddhartha is going to raise nearly 3,000 crores in NCDs. This will be done through one of its real estate arms, which is Carnelian Real Estate, which is 100% subsidiary of Carnelian Development Limited. Now, Carnelian is into development of IT parks in Bengaluru and Bangalore, and this is something which the subsidiary is going to do, raise 3,000 crores through the NCDs. The structure is in such a way that the arranger is Standard Chartered Bank. There will be two escrow accounts which will be created. The first escrow account will raise money through NCDs. This money will be used to remove the pledges of Mindtree, because it's held as security with various lenders and investors. And the second escrow account will be used for the sale transaction. The sale transaction would bring in money from L&T, because L&T has already said it's going to buy 20.32% at 980 crores. Once the sale money comes in, the money used in the second escrow account will be used to redeem or extinguish the NCD. That's how the entire structure has been done. Now, the terms of the deal are interesting. It has a coupon rate of 15%, and it's 15%, and it also has a tenure of 1 year, 1 month. That means he is expecting the entire thing to be completed within a year as we speak. But beyond that, the cover is 1 times Mindtree shares, which basically means that there is a risk in this entire episode or this security, because anytime Mindtree shares moves beyond 5%, he will have to bring in fresh cover within 5 days. Now, there is a termination clause as well, where the cover increases in case the sales agreement with L&T falls through. The cover can go up to 1.23 times after 45 days. But aside of the Mindtree shares which have been put as security, there is a 49% security or pledge on Cafe Coffee Day Global, which is the company which owns the entire Cafe Coffee Day chain. That is 49% pledged as part of this, over and about the personal guarantees which have been given by VG Siddhartha. So the agreement also requires VG Siddhartha to maintain interest account, wherein at any given point in time the interest for 3 months have to be there in that account. So it is a quite tight ring-fenced way of raising money, where Standard Chartered has ensured that there is no default that happens. At the same time, there is enough cover comes in. L&T is, on the other hand, is expecting this deal to be completed within 45 days.
So how will that happen? So
see, the first trigger is 30 days trigger, where technically CCI approval needs to come in by 30 days. So they have given a time of 30 to 45 days when the CCI approval happens. As soon as the CCI approval happens, L&T has the right to undertake the transaction, and the money gets transferred to VG Siddhartha. L&T also has a trigger to start buying from the market as soon as the CCI approval comes in. So you can see some movement in Mindtree shares if it's going to buy.
But how do these two transactions interlink? One with VG Siddhartha looking to deleverage his pledged shares, at the same time selling it off to L&T.
So the thing is that the trigger, there is an open offer announcement which has already been made.
Yeah.
At 20% you don't need an open offer, but the trigger also comes in when you start buying from the market and you cross 25%, 26%. So the open offer comes in that sense. So they have a right to buy up to 15% at 980 below 980 rupees from the market. So the entire transaction of L&T Mindtree is a three-phase transaction. So VG Siddhartha stake 15% from the market and 31% in open offer. So the first trigger happens on VG Siddhartha, where VG Siddhartha's stake is sold and VG Siddhartha is able to deleverage his in the balance sheet. The second stage is when L&T is going ahead with its own plan when by increasing stake to 35.
What I was trying to say is if there's a delay in the first stage itself.
The first stage and second stage are linked in the sense they are all linked to CCI approval. So the CCI approval gets delayed, or antitrust approvals from other agencies get delayed because because Cafe Coffee Day or some of its entities are globally operating. So if they get delayed in any way, this entire transaction gets delayed by that time.
The pushback happens. Right. Sajid, thanks so very much for joining in. A lot of information coming out with regards to this particular deal. Moving on, getting in a market opinion then, and companies impacted by the ripple effect of the NBFC crisis may only recover in the second half of FY20, says Vikas Khemani of Carnelian Capital Advisors. In a chat with us earlier on today, he spoke about how the market reads the economy after a shock. Listen in.
From medium term to long term perspective, long way to go for two reasons. I think even in a slowing down global world, a depression, sort of recession kind of world is not good for India, but mild slowdown in the global growth is very good situation for India, because I think we need benign commodity prices, we need reasonably okay supply of capital. We don't need a kind of crisis or unwinding kind of situation, but a reasonably whole kind of situation on that side. Otherwise, I think domestically we are pretty strong. So I too believe that if this setup continues and we have a good, stable government in place, I have no doubt in my mind that we will probably be surprised on the money flow which could come to India in times to come.
The question is, tactically, with the slowing growth numbers which are looking evident, or maybe the numbers are not looking evident, but the scenario is looking evidently slower, would you reckon the markets will take cognizance of that, or because of the Fed moves and the gush of liquidity, the equity markets could even do well even if the economic numbers slight slowing down?
I think if you see, Neeraj, markets always tend to react for any situation in advance. Market make hypothesis and then moves ahead. Whatever numbers you are seeing now currently is a result of a massive setback, crisis, or whatever you can call, we saw in October onwards till right up to January kind of period. Whenever this kind of shock to the economy comes up, no business, how much stable, solid it is. I mean, you had hit from oil, currency, raw materials, and credit. I mean, all those things came together. No business, how much stable it is, can be kind of stable and deliver good growth. So I think what we are seeing in Q3, Q4, and maybe Q1 as well, result of some of those, shock to the system and shock to the businesses. But as I was saying that, we are slowly coming out of that. Numbers for, corporate earnings may not immediately improve because of the slow and steady improvement in the macro scenario, but it always catches up. And my hope is that by, Q1 also we should not be very impatient about expectations. Probably real normalcy should be Q3, Q4, Q2, Q3, Q4 onwards of next financial year, and that is where you will start seeing. But market will always make hypothesis in advance, start expecting, seeing the macro improvement, seeing the overall change in the environment, and that's what the setup right now we are in, Neeraj.
Okay, so your point is well taken, Vikas, that some of these NBFC and liquidity related sectors showed those signs of stress. What about the other ones which don't get impacted by that but have sounded off some bit of issues? HUL has mentioned that sequentially rural growth will come off. You could blame it on higher fares, but aviation passenger traffic growth, which was a healthy 15-20%, has come off to 5.6% in the month of February. There are some high frequency indicators not impacted by NBFC stress which are showing those pain points too. What do you do with these spaces then?
I think Neeraj, two things. One is I think rural demand on consumer sector has been reasonably solid. They have grown very well through this crisis, and as the rural spending has been growing, they are doing very well. That's the reason the entire basket has outperformed. And maybe they are guiding based on because of the high base coming over. I mean that kind of growth sort of sustainable may not be possible. But I think especially the consumer discretionary side, I think non-discretionary side, there is reasonably good traction on the demand, and most of the companies have done very well. Secondly, I think reducing this crisis what we went through only NBFC crisis will not be fair. I think it was an entire systemic kind of thing. We have two things. NBFC was providing reasonably good amount of liquidity. PSU banks for a long time has been almost frozen. So the segment which was providing credit to the entire system has almost sort of came to a standstill, and it has all a tertiary effect, ripple effect, and also psychological effect in the entire economy. We had currency, oil price, markets, everything was kind of, so it always has an impact on everything else which we do. And I think you referred to aviation. I mean, if let us say there is a sort of this kind of shock in the system. I mean, I know lots of corporates which kind of slowed down or postponed their travel, or they were moved into cost-cutting mode. So all those things tend to have that impact. And I would probably look at aviation in some sense also, current ongoing sort of situation in the airline industry. But anyway, I mean, one would not know really. But the thing is, I think all those things do tend to have effect on pretty much every aspect of the economy, and my sense is that you will start seeing that slowly recovering.
Well, that's one market voice. Now, speaking of markets, flows and economics, or the Economic Affairs Secretary Subhash Chandra Garg believes that the foreign investors are confident of the long-term fundamentals of the Indian economy and that elections are unlikely to have a bearing on that. In an exclusive conversation with Bloomberg's Guy Johnson and Jessica Summers, Garg also defends the revisions in India's economic data. Listen in.
Foreign investments have been flowing in steadily in India for last many years, so to say. This year was no different, despite the oil price rises, which we saw very heavily in the first half. But the portfolio investment money, both on equity side as well as on the debt, did see major outflow in the first half when the oil was rising so fast. But in last couple of weeks, the equities have seen major inflows. Debt outflow has also stabilized. So it's not pouring in, I wouldn't call it that way, and I don't think it's much to do with the Pakistan situation or the otherwise, but it's broadly based on number of factors, oil being one, the economy doing well, as well as possibly some sort of confidence in the community of global investors that possibly they will see the stability going forward.
Mr. Secretary, the expectation seems to be amongst foreign investors that Mr. Modi is going to win the election, and that is going to provide that stability. It is not a foregone conclusion, though. Should India be ready for some volatility in terms of some of those flows that we are seeing into the country over the last few weeks?
I also get the sense of what you're saying, that a lot of people who are waiting on the sidelines, thinking about what kind of election results might be, and that money was in a way waiting game. Many of them seems to have taken a call that its risk of waiting might be somewhat higher than not investing. But certainly the results will have to be awaited when finally the results come. I don't see large amount of volatility being there, but because the probability of the other result might not be very good. But I guess we should wait for the results to come and see how things get there.
Mr. Secretary, last week 108 economists from around the world raised questions about political influence on high-frequency data out of India. How do you respond to that?
See, I have very clear advice on that. The data have been revised, which is a fact. The GDP data was revised in last couple of rounds, including the data for the 16-17 and 17-18, but that data revision is based on facts, actual data in flow. It's not based on any presumption or anything. So it might not appear to be meeting people's expectations or some, but that data revision is, or the projections revisions is based on the real data. So I don't think it should be suspected. The results are there for everyone to see. It does affect, so this year's GDP has been somewhat revised downwards based on the GDP revision of last 2 years upward. So in a way, it has hurt the current year's GDP projection. So it's not that any revision which is done has positive sort of messages all over. The current year's GDP, as I said, is revised downward because the base has gone up.
Yes.
So I don't think there is it makes good sense to dispute or doubt. It's better to take it as it is. And I do confirm that's based on the real data revision.
And that debate, of course, continues. Let's put the spotlight, though, on what's happening in the markets. Before we talk about the positives, just want to mark what's happening to the markets. The index has just come off quite rapidly in the last few minutes of trade. The intraday will come up on your screen. And as you can see, there are sharp slide downwards for the Nifty, led by the Nifty Bank, I presume. 227 points in the red for the Nifty Bank now, 29616. So those targets of northwards of 31,000 might still stay. But for now, there's a bit of a pullback that we're seeing, and a sharp one at that. That's happening in the last few minutes of trade. I reckon the volumes too could have jumped up a little bit. We'll talk about this in just minutes from now. But while the index is looking soft, one space that is looking strong even now is the real estate space. That whole bunch of stocks which were very, very active. Maybe they've come off a little bit, but it's time to put the spotlight on what could be the reason why these stocks are doing what they're doing, and the fact that the Nifty Realty Index and specific pockets are extremely strong. Firstly, the index still a bit in green despite the market showing a sharp pullback, so that is one. Let's just get the other perspectives going. Now, what could be aiding the sentiment? One is the revision in headline GST and the options available to players with on a high to take either with the input tax credit or without the input tax credit at different rates. So that is part one. Part two, the Embassy Office Parks REIT subscribed 2.57 times, and it was a strong subscription that resulted in almost any player having a strong commercial rental portfolio to go through the roof the last few days. Has been just quite amazing, the up move that we've seen. And then, of course, I mean, this is the evidence of that. As I said, maybe some stocks have now come off, but look at the gains. The Godrej, Prestige Estates, Oberoi Realty, they're all looking very, very strong in the session today, even now. They were stronger, by the way, just about half an hour ago. Having said that, the key is what's happening to individual pockets. So Prestige Estates, just look at this. This is their under construction area in million square feet, worth number of crores. So premium and luxury 1.1 million, mid income 4.95, and that's the bulk of the portfolio for which Prestige Estate has the flexibility to take the lower rate GST, even if it's without the input tax credit. But an option available, and a lot of people believe that the Bangalore players might do that. But I think the bigger reason why this is happening is because of the fact that they have got under construction commercial area or rent yielding assets as well, which should all do very well if indeed at some point of time over the next 12 months any of these companies decide to go for a REIT offering. What has that done to Prestige Estates the last few days? Frankly, quite amazing. The move up, it's not just the 8% move today, but this up move. This is above 65% from the lows in November, but just look at this. The last few days, it's really had a substantially sharp up move, and as a result of that, by the way, in today's session too, if you get the graphic dashboard, you'll see what I'm talking about. In today's session too, a really sharp up move in trade and on fairly decent volumes compared to the averages. So look at this, the sharp up move in the volumes, the white line from here on versus the 20-day average. So that is part one. But two, more importantly, if you get the ANR function up on the screen, you will see what I'm talking about. One, the sudden uptick that we've seen in the stock prices without there being any resultant changes or revision in the in the prices that analysts have given to this company. So Prestige Estates, for example, and if we enlarge this chart, the white line is the average price, and the yellow line is or the expected price, consensus price, and this is the up move. So as you can see, now the return potential is very limited because of this sharp uptick that we've seen in Prestige Estates the last few days. However, the larger analyst community still remains bullish, and as a result of which, if we can get back to the NR function, you will see this. 18 buy calls, 94% or 95% of the analysts are bullish, just one sell call. The return potential after this recent up move has been negated, so now it's just about 7%, otherwise it was a lot higher. It just shows what the sell side believes the real estate space can do. So good moves. Let's see if these last in a scenario like this. Let's talk about that with our experts. They join in on the show. Jai Bala of cashthechaos.com with us. And before we talk about the markets at large, Jai, just one quick thought on the realty stocks as well. The last 3 or 4 days, they've been on a roll. Will you take money off the table, or would you be comfortable initiating fresh long positions here?
Yeah, good afternoon, Neeraj. This is somewhere in between. Actually, I can say that, within the real estate space, it's a little bit diverse. Godrej Properties and Oberoi Realty, I've been bullish on, is actually is just in the middle portion of the move. So I would think that Godrej Properties will actually cross the highs past 900, 950 and probably go to 4 digits. I won't be surprised if Godrej Properties heads to something like 1,200. So that's the kind of bullishness I have, within these names. But if you look at the stocks from the October low, Godrej Properties and Oberoi Realty have a very clear trending moves, but whereas something like a DLF is much more choppy and it's not that attractive. So should be very selective within the space. But if you are initiating fresh positions, which is a question you asked for, you got to reduce it to something 50% of your normal allocation that you would do for a stock and create fresh long. But if you're already long, Godrej Properties is heading to a much higher level, probably similar position for Prestige and Oberoi. But I like my pecking order is now I would put all my money in Godrej Properties, and a little bit if there's something left, I will go for Oberoi Realty.
Okay. So do watch out. That's the real estate pack. But it's pertinent to talk about the markets as well, and that's what we should do. Brijesh Singh of StockAxis also joins in on the conversation. So both Brijesh as well as Jai Bala to help us navigate through the next 1 hour of trade. It's just turning a bit tricky, Jai, isn't it? 0.5% down today. The Nifty Bank 180 points down. What do you view this as? A weekend pause? Or would you believe that we have done too much too soon and maybe a pullback is in order? How would you play this?
Yeah, good point, Neeraj. I think this is a pause to refresh, and it's a welcome pullback. And if you look at the markets drop from the intraday highs, it is much more than from the 0.5% the market is actually reflecting. So this is a welcome dip, and you should be ready to buy this dip. And I would have my markers for the markets around 11,250 on the Nifty, but I would think that even the deepest of retracements wouldn't go back to the 2019 highs before the March breakout. So I think that's the kind of levels you should be prepared for. Or if you're looking at my medium-term position has always been that the markets are heading for record highs, and 11,760 is a matter of time before it gets taken out. My price objective for the next 2-3 months is about 12,400. And so I would think if you want to maintain multi-month position, you should stagger your position and start picking up around the 11,300 level to 11,250. I don't think it's going to come to 11,100. So this is a decline for people who missed the rally.
Okay. Jay, what kind of stocks are you looking at now?
Yeah, I'm looking at a couple of positions, and I'm expecting the market rotation to go from one sector to another, and I think the next sector to start performing when the overall market takes a breather is going to be the IT sector. And I have 2 picks within that. One is the index itself, another was an individual stock, and I'm expecting Just Dial to which is performing very well in today's session, to go somewhere closer to 750. If you look at the medium-term charts, it had a consolidation for several weeks, actually several months. It has taken out the 52-week high, and that high has actually crossed the consolidation it was doing between 2017 and 2019. So this is a good breakout, and after clocking 52-week highs, it pulled back, and it's now after the pullback, it's rising in today's session. So place a stop below 585 and expect just dial to hit something like 750. Coming to the IT index itself, if you look at the move from the November lows where the IT index bottomed and came close to the all-time high, and the pullback from those levels to 15,200 where the markets have come in the last two sessions, that is a near perfect 32.8 retracement. So this is a bullish setup, and if there are supports which I anticipate to hold, I think the index is heading for record highs. My medium-term price for the CNX Nifty index is Nifty IT index is 17,500. So this leg is starting a fresh move, I would think so. And I'm placing a stop below 15,100 and expecting this move to take out the highs past 16,300 and go to 16,500. And so one can go long on the April futures with the levels that I've mentioned. I'm marking them as a spot level, but you can hold on to futures position using these stop loss levels, 15,100 on the spot market and price objective of 16,500 on the CNX Nifty IT spot market.
Brijesh Singh, what about your call?
Good afternoon. See, if I talk about first index, no doubt the rally has been very fast from 11,000 to the recent swing high of say 11,560. Now the only plus sign is that the Nifty has been holding the pattern of the higher top and higher bottom formation, and still there is no sign of any weakness. No doubt there would be a profit booking, but till it doesn't break the previous swing high or the previous swing low, we should not be worried about. But as a trading bet is concerned whenever you have been trading in this type of market, because there would be a wild swing. The only plus point is that if we are able to consolidate in the range of say 11,350 or say 11,400 on the downside, followed by 11,500 or 11,550 on the higher side, that would be a very good part for the next leg of rally for the upside has been concerned. Now taking a Nifty spot value, I mentioned that anything below 11,480 one can go for a long side with a strict stop loss of 11,420 and play for the target of 11,590, and this target I'm assuming would be achieved within say 4 to 5 trading session. Now coming to the calls, I have two buy calls. One is Marico and another is ACC. For Marico, I have been bullish because on the hourly chart, the stock has been maintaining the higher lows formation, which is giving a bullishness view. Somewhere around 340, the stock has been quoting. So one can go for a buy side with a strict stop loss of 337, play for the target of 353 to 355 zone. Time frame to hold would be 2 to 3 trading session. And another call would be an ACC. The ACC on the daily chart or the hourly chart, it is in the process of making the rounding bottom formation, which is giving a bullishness view. Somewhere around 1580 and below, one can take a buy call with a strict stop loss of 1550, play for the target of 1625 to 1620 to 1625. Time frame to hold this counter would be 4 to 5 trading session.
Okay, got that. A few other stocks actually that have been doing well on the index per se. L&T for one, the last 1 month has not been all that bad. Stocks gained 9% in the last 1 month, and it's moved back towards 1,400. Remember the original buyback that they had announced, which got shot down, was at a price of about 1,495, 1,495. So not bad. We are making a steady approach beyond 1,400. And the other one being Reliance Industries should pull that one up as well. This entire week and the last week, steady gains. Today's session sees some amount of profit taking. So, but normal after the kind of moves that the stock has seen in the last 1 month, including today's cut of about 2%. The stock is still up 10% for the month. Bala, two big names, two heavyweights on the index, L&T and Reliance.
Yeah, the picture is uniform in both the big names. I think both are heading for further record highs. And I'm saying further record highs because Reliance is already at record highs. And I'm at projected a level of 1500 for the medium term for Reliance Industries. And currently it's about mid 1300s. So I would think post this pause, which is in sync with the index, I think Reliance is going to go to record highs, and surprisingly, L&T would come back to the same levels. Close to same record highs levels of 1500, and that's also quite bullish. And the recent pause here declined to about mid 1340s. That is actually the level you should have picked up, and you can use that as a short-term stop. And expect this to take out the December highs of about 1460 and go to some mid 1500s.
Mid 1500s for L&T. Gurmeet Chadha of Complete Circle Consultants is also joining us on the show this afternoon. Gurmeet, good afternoon to you. A breather for the markets from the rush that we've seen over the last 2 or 3 weeks. How are you positioning yourself right now? Is it time to start adding more to the portfolio, or probably just wait with this little bit of cash on the side?
So there is actually a mix of two. So what you see, what we are advising clients is that in this cycle, what we are seeing is probably the investment side of the economy is probably looking a little better, and the consumption side, led by auto, we're seeing some kind of a tapering off, which is actually good in the medium term. And if you see in the previous bull phases we have had, the corporate and the investment cycle has outperformed the consumption side in the period when the cycle comes. So a bit of that is it may not be bad. Also, one must be careful on the valuations, because if you see after accounting for 6% Nifty earnings, you are at 23 times forward. So this is not 2009 when a re-election, when the government got a re-election and we were at 14, 15 times, and we saw a big upside which came in. So I think one has to be careful on valuations, and this is a time not to get carried away with momentum. Some amount of cash will always help. Also, these days the cash options are also very, very good. I was checking the roll spread for arbitrage funds. They're at about 6.5%. If you see the CP/CDs vis-a-vis repo, there's a very high margin of safety. If someone was to even stay in cash and be at the shorter end of the curve, you have a 7-8% kind of a yield to be made, and in arbitrage case it could be post-tax. So being in cash also will not hurt your portfolio much if you would be in cash. So I would prefer cash and use some dips in few stocks to accumulate and be patient.
Interesting. Is the larger call, Gurmeet, that there could be a pullback into some of these growth sectors, autos, for example, where numbers are looking slightly wobbly? The FMCG staples, wherein HUL has said that there could be some stress in volumes on a sequential basis. What do you do out there? Because one could argue that a stock like Maruti's come off so much. Is it time to buy as opposed to thinking of selling? But the scene is still looking very, very wobbly.
So, Neeraj, I agree with you. I think the slowdown is also reflected in the price. So Maruti, if you see, has underperformed 35% when the index has outperformed 10-12%. So it's almost a 40-45% underperformance. But as I said, the pain probably will take a little more time, possibly maybe another couple of months. I firmly think this is a transient phase. I don't see that Indians are going to consume less of four-wheelers or less of two-wheelers. I think all factors, whether it was tight liquidity, congestion in metros, some impact of the aggregator apps. Also, if you see, the second-hand sales have gone up for four-wheelers quite a bit. So they're all factors which have come at, everything has just come together. I think things will ease out. So this is a good time to, add. So I'll be a buyer of Maruti at these levels on dips, but I'll be patient over next 2-3 months in terms of, how to buy. Also, on the consumption space, there are some very good opportunities other than FMCG. So if you look at, and I consider agrochemicals as consumption with the kind of rural push government is getting into. Look at, for example, something like a UPL. After the Arista acquisition, it's talking about 5 billion kind of a top line. with a $1 billion kind of an EBITDA. There are agrochemicals worth $3 billion, which will go off patent. The innovation rate has up from 13% to 18-19%. So very, very good business to look at. Also,
sorry, just got a patchy line out there, Gurmeet. We'll just try and repatch that. But Gurmeet, if you can hear me, maybe you want to hear this because it's talking about consumers. And I think there is a story that is now coming up. The consumer companies claim that GST rate cuts have aided volume growth, but distributors don't seem to agree. Charlene D'Souza has spoken to the consumer firms and distributors now and joins us to talk about this dichotomy. Charlene, what is it that you're learning and why is it important?
Okay, so there is no consensus right now between consumer goods makers and distributors and retailers as to why this is happening. Consumer good makers believe that this is because of lower GST rates since September 2017 that has kicked in, that has caused this growth in the sector, whereas Sunil Duggal told us that, you know, it is only because of these lower GST rates that has caused consumer uptick, while distributors and retailers believe that it's not just GST, it couldn't be GST, but an overall growth in the sector that caused consumer companies to report double-digit growths. Now, to quote Sunil Duggal, he said if prices come down, people tend to consume more, and we have a consumption trend in the last 1 or 2 years after GST implementation. He further stated that I don't think there has been an underlying consumption boom, but the fact that people have to spend less to buy the same product has accelerated consumption. Now, Nestle believes that it's not just lower GST rates, but it's also growth in the sector that has caused volumes to witness an uptick, while Mayank Shah from Parle Products also believes that while in biscuits the rates were up, but in namkeens and in other categories which the company sells products in, he says they've witnessed an uptick. Now, companies also say that there's been a movement from unbranded to branded, especially at the lower end, lower price points such as 5 and 10 rupee packs, where consumers have moved to buying branded products instead of unbranded products. And distributor that we spoke to in North India, especially in Punjab, said that there have been instances that, you know, consumers have not bought more of the same product, but there have been instances of premiumization where, instead of, because they've realized that prices have fallen, so they've opted for a more premium product within the same category.
Okay, interesting. So the reason's not known. The only good part is that there is some uptick that we've seen, yes. But the interesting part,
whether you can attribute it only to the GST rate cuts or the fact that consumption
but the
demand
story now remains that after this high base, whether this kind of growth will continue going ahead is what now we need to look out for, since 2019 has already kicked in.
Well, HUL is saying that it won't, so sequentially at least it'll go down. But interesting analysis out there, more importantly, and good survey, Charlene. Thanks so much for joining in. Well, and again ties in with the point that the reasons may be whatever, but will we see the small downtick that we could likely see in the first quarter flip around in quarter 2 and quarter 3 onwards for the current calendar? We'll get to know about that shortly. That's consumption. What's done well though in today's session, and amongst other things, aside of real estate, I think a stock that we missed out on talking today is SRF. That stock at 2442, 1.5% higher, and therefore by virtue of this move is trading at life highs for itself. Big sharp up move. Select specialty chemical companies have done well. SRF is right up there amongst the leaders of the pack and is doing really well. Gurmeet, you track this one, SRF, and why so much of optimism around this?
So we do, Neeraj, won't be able to comment too much. Happens to be our client in terms of offering both treasury management and other solutions. One company which I can obviously talk about is Aarti. I think this specialty chemical space is looking good. If you see, it's largely a B2B business. So if you see the specialty chemicals contribute about 80% to the top line, 90% to the bottom line. There's a growing trend of matured chemicals being outsourced. So the N1 to India and China, this N1 and N2 stage of outsourcing is a very, very dominant theme. So Aarti looks very, very good for us. It has a great set of tie-up, and this space is a high entry barrier space. It's not easy to get in those B2B tie-ups for any new company and to come and replicate this. So we like Aarti Industries in this space.
Okay. But, okay, then maybe you want to get a technical view, Devina, on SRF, because that stock is clearly on a roll. Brijesh, quick thoughts here. 1.5% higher, 41 rupees, now trading at life highs.
After making a base of 2275, that was the previous swing high, the stock has been continuously moving, and that too with increase in volume. That indicates the strength of this counter. Now, immediate basis, if you talk about the support, then the support lies at 2350 to 2370 band. So I'm not looking that band would be breaking. It's a bit deeper support, and on an immediate support, if we talk about, then 2410 to 2420 is a support. But the strong support which I am looking is that is a previous swing high. So I'm looking this stock, going all the way to the level of say 2700, or even the chances are that if someone has a view of say for 3 month to a 4 month time frame, then the stock can even try to touch a level of 2950 also. So there are another say 500 rupees upside has been there in somewhere around 4 to 5 month time frame, and the support which I'm looking, as I said, 2370 is a strong support which should not be get broken.
Okay. Got that. That is a technical call on SRF there, trading at new highs. Moving on to the chart of the day then, Vodafone Idea is planning a 25,000 crore rights issue, and while one needs to see how many retailer investors participate in it, it's going to give the telecom operator a distinction of becoming the company with the highest number of outstanding shares once the issue is completed. Samit Sarkar joins in with the details. Samit.
So if you see, Vodafone Idea now might be on the verge of losing its top spot to Reliance Jio when it comes to revenue market share. But there's one thing where it will surely beat all the listed Indian companies in very few days. Now, post the proposed rights issue of around 25,000 crore rupees, the company will have to issue close to 2,000 crore equity shares. Now, this would make Vodafone Idea a company with the highest number of equity shares in India. Now, if you see, currently Vodafone Idea has close to 874 crore equity shares, which will now increase to close to 2,874 crore equity shares post the rights issue, and this will be the second, 2 times more than the second largest, that is the state-owned oil explorer ONGC, which has close to 1,283 crore equity shares. Now this is followed by ITC, which has close to 1,225 crore equity shares. So after this rights issue, the total number of equity shares with Vodafone Idea will be close to 2,874 crore, which will be more than 2 times what ONGC has.
All right, an interesting statistic there. Thanks a lot for that, Samit. So watch out for Vodafone Idea. Going back to the markets then, and NTPC today is the best performer on the index. It's up about 3% while it has been quite a distinct laggard over the last 7 days, 12% under for NTPC, reversed some bit of lost ground in today's session. Bala, do you track NTPC, and has today's move changed anything for the counter?
No, I'm afraid not. It's actually just I would think it's just a flash in the pan. The long-term structure is quite weak, and I would think this hasn't impacted much. But there is a trading rally, probably some more another 5 to 8% bump up. I wouldn't be surprised if that stock continues further in this direction. But this is not a change in trend for me.
The other set of companies are the tire companies. Rubber prices have corrected a little bit and the rupees gained. So essentially, any kind of crude and oil and imported rubber related consumption companies should actually benefit. It's not quite showing in the way the stocks have reacted today, but by and large, raw material costs for companies which typically stay above that 50-60% mark, both of these factors put together should actually augur well. Gurmeet, can this be a slight bit of a torch better, or would you reckon that the larger move of autos slowing down will have its impact on the tire company sales as well?
So Neeraj, there will be some impact. But if you look at tire industry, I think we've seen a lot of consolidation. And if you put the market into basically 3 categories, which is obviously new tires, then you have the replacement market, and then you have the refurbished ones. I think one which stands out is MRF. It's a dominant player in all three. So if you want to play tire and the raw material cost, as you rightly pointed out, is about 70-80% of the overall cost in terms of the tire makers. So some softening in prices so if you want to play, I think MRF is a better bet. But as I said, the entire sector is under a bit of a pressure. So you can be a little patient, and maybe if you want to add something in this space, what we like in this space is MRF.
Okay. That's within the tire space. That's looking fairly okay on the fundamental side. Let's get in a few other views going, and I just want to quickly look at some of the bigger movers within the broader market space, and then just get in some comments from our technical experts. So while we've got RCom, third straight day in a row, that's pulled up some weight. Prestige Estate continues to do well. That's up about 30% in the last 7 days today. GVK Power and Infra is up 5%. DB Realty, Heidelberg Cement in the last 1 month has moved up 18%. Godrej Properties, again, another 4% in today's session. The start was softer. It opened closer to 808 rupees, and now it's trading closer to 845. If you were tracking countdown on Wednesday's session, we had a buy today, sell tomorrow idea, in fact, a carry forward idea at a level of about 800, 805. Pushed through to about 830. It's way past that target price that was given out. So 845 on Godrej Properties. Is there more steam left? Brijesh, would you, if you had Godrej Properties at levels of 805, still hold on?
See, Devina, the stock on a daily chart has formed a bullish flag pattern, and which is giving a target of 999 or 1,000 rupees. Time frame will be somewhere around, say, 3 months, roughly around. So the flag pattern has been broken on the higher side with increase in volume, and right now at 846, if someone wants to go for a BTSC sort of thing, then keep a stop loss of 823. But purely from a investment point of view, present rate or any dip at 820 or 830, one can go for a buy side with the stop loss of 770 and play for the target of 1,000 rupees.
All right, that's 22% in the last 4 sessions that we've seen the stock moving up, 846 and going from strength to strength in this one. Oberoi Realty also pitches in today's session within the pocket itself. For Jet Airways, a slight bit of a comeback that you're seeing on the counter. Today is up about 3.5%. Some interest in some of the sugar names. So Balrampur Chini does okay for itself. LIC Housing Finance at 529. I should pull up an LIC Housing Finance though. It's not been bad in terms of the last few days, but the kind of excitement that we've seen in the stock on previous occasions doesn't quite match up to that. Within the housing finance space, would LIC be a preferred pick, Gurmeet, or would you have a better choice?
See, I would still, then I go with the HDFC Limited. Reason being, I think the HFCs will see more tightening of regulation. I don't think so. NHB has done a great job in terms of considering what has happened in this entire space. So you have to look. So I was seeing the cost of funds for most NBFCs, and I think the only one which has been able to maintain it sub 9% still is HDFC. Also, it has more than 1.5 million depositors. So there's a lot of retail deposit base it has. Also, my sense is that HFC would be a bit of a laggard also till the time the transmission really plays out of the interest rates. Now, today at home loans and LAP rates being roughly being at around double digit, rental yields being 1.5–2%, I think they'll continue to be under pressure. One trigger obviously has been the GST rates, where even the under construction projects after 1st April can be taken as per the new slab. That's going to be a bit of a booster. The focus on affordable housing will continue, but I would not be a buyer at this stage in housing finance companies. I would prefer to wait it out.
Okay, Gurmeet, we'll leave it at that. Thanks much for taking the time out and being with us. Actually, maybe Gurmeet, just hang on for a bit. We'll probably ask you some more questions. We need to slip into a very quick break right now. Just stay on for a bit. Come back from the break, get you the Fab Four stocks of the day. At 3:15, we get you what dealing rooms are recommending in the session today, and then some closing strategies at 3:20. Stay tuned to Bloomberg Quint Live.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
All right, welcome back. You're still with us right here on Countdown. 28 minutes left to go for wrapping up the week and the day. We're down about 0.5% on the Nifty. 11,456 is where we're at. Nifty banks down about 0.6% right now. Mid caps and small caps are losing equal ground. Taking a look at what's happening across Europe and get you a sense of how the global markets are trading at this point. So you've got a dip day across the board. So FTSE 100 down about 0.75%, almost 1% down for CAC, and DAX 2 looking equally weak. Dow futures up next. That too is down about 0.5%. So the sentiment across the board seems to be a slightly more weaker one. For the turnover, the last time when we started off the show, we saw a figure of about 24,000 crores. It's nudging 30,000 on the cash market. On the F&O side, we've got about closer to 8 lakh odd crores on the futures and options space. That number should increase closer to about 11.5 by the end of session today. Moving on, let's find out what has made it to Sumit Sarkar's list of the Fab Four stocks of the day. Sumit, good afternoon.
Good afternoon, Devina. So first on the list is Aster DM. Now the stock has gained close to 2%, but not much of a gain. Okay, it's up nearly 3% now. That is Aster DM. Now this is after HSBC has initiated a buy rating on the stock with a target price of around 205, citing margin recovery, strong revenue growth, and a 54% EPS growth over the next 2 years. Second on the list is GVK Power and Infra. This is after the company acquired additional 10% stake in Mumbai International Airport for 924 crore rupees. The company will be acquiring 12 crore equity shares for 77 rupees each. Third on the list is GMR Infra, where the stock has gained close to 2.7%, and this is after the company awarded commercial development in one of its Delhi AeroCity project to Bharti Realty and a consortium led by Bharti Realty. Now in this project, the company will be getting an annual rent of close to 364 crore rupees from the company. Last on the list is Prabhat Dairy. Now the stock has hit an upper circuit of 5%. This is for the fifth straight day where the company has seen gains on the back of high volumes. Today the volumes are nearly 5 times its 20-day average.
Interesting. Well, let's remarkable for a stock which had got beaten down to 50. I think the change of one stance wherein they're going to merge.
Very strong for Bharti Prabhat Dairy.
Prabhat Dairy. Yeah, yes indeed. So, thanks for putting that into perspective. Actually, Gurmeet, I don't know how closely you track Prabhat Dairy's developments, but I think the fear was around that double distribution tax that they would have to pay. I think they were now talking about merging that subsidiary so that that tax doesn't have to be done now. And I don't know if it gets entangled into legal crosshairs as to whether this can be done or no, but the stock has certainly revved up a little bit after that announcement. So if you look at the last 3 months, Prabhat Dairy has recouped some bit of those losses. What does one do here?
Neeraj, purely from a trading perspective, one can take some exposure here. The stock, as you rightly pointed out, was beaten down for the concerns you highlighted. I think the better play, if you want to really play the beverage now, I think is Varun Beverage and even Tata Global Beverage, despite performance not being that great for last 1 year. The tea prices have firmed up, which is a large part of the business. The Starbucks business, I am a great believer that will eventually do very, very well. Also, you are at the onset of the summer season. The next 3 to 4 months are very, very good for this space. The penetration levels will pick up. You have an election campaign coming up. So even some of the beer makers, there's something like United Breweries. So you want to play that space, play something which is more fundamentally good, something where you have, better management and, perhaps slightly reasonable valuations.
Okay, well, interesting. Yeah, actually, a lot of these dairy companies, while they showed a lot of promise of multi-year secular growth, have fallen by the wayside. Parag Milk Foods as well hasn't really done anything special in the last few months. Similarly, Heritage Foods, while they're doing all the right things and expanding distributors, etc., if you just look at the last 3, 6, 9 odd months, Heritage Foods too, just lying absolutely flat, and 533 is way lower than a price that Heritage Foods has traded in the past. If you look at 6 months flattish, I think 12 months it would be slightly off from where it was as well. So it's just a small issue that some of these stocks have had. They've just not been able to gain any kind of momentum despite promising a secular growth story. So that's what's ailing them. Let's talk about stocks which have done well today. We've spoken about real estate, of course, and that space continues to rise and shine. A very volatile stock which has bounced back a little bit from the lows of the day today, Just Dial. It's up about 4%, 632. Bala, come in on this one. Typically, patterns indicate whenever FI flows start coming in, Just Dial 38, 39, 40% owned by FIs, tends to do well. The last few days, it's had a very, very good run. Is it approaching key resistance levels, or do you reckon that there is still some more upside?
Yeah, I'll talk about Just Dial as well as a couple of stocks that you touched upon. Just Dial has this habit of going 2 steps forward and 1 step back. So actually, as I had mentioned in my opening comments about individual stocks, I said Just Dial is heading for much higher levels from current levels. So it's actually taken out the consolidation bit of 2017-19. So it could turn out to be a big breakout. So at least 750 is potential for Just Dial. And you had just briefly spoken about Heritage Foods, and you had correctly identified the level of 570. That level 570, once that's crossed, you're going to see a huge move come through for this. If you recall, in our Diwali show, I had picked Heritage Foods as the long-term pick for the coming year. So watch out for this. Once 570 is broken on Heritage Foods, it might even go back to something like 1,000. So that's a key level that you have spotted. And earlier it also mentioned about SRF. If you recall, in February I had mentioned about SRF heading to record highs past 2,600, 2,700 is actually doing that. So record highs at current levels is not a surprise. I'm surprised that it's come a bit slower than I had anticipated. I would have expected SRF to be at record highs in a much quicker fashion. So I would think the powerful portion of the move is still pending. As Brijesh rightly pointed out, it could even go to 2,900.
Let's talk about banks then. And within the PSU lot, SBI has been up 10% in the last 1 month. Though some of the other smaller PSUs have seen bigger moves. But from a fundamental standpoint within the PSU lot, would it be an SBI, or would you choose a rather smaller name to go by, which has a slightly bigger potential in terms of the pricing action? Gurmeet.
Devina, to me?
Yeah.
Yeah, so Devina, very, very positive on SBI. I think, so we have put in a 3C kind of a tracker, which is for us is the CASA growth, the deposit growth, the credit growth, and the credit cost parameter. And I think SBI fits in all three. I've been, tracking some of the fintech. We keep talking about fintech in the BFSI space. If you see the biggest mobilizer dispersal of loan which has happened is through this 59minutes.com. 24,000 crores disbursed, 30,000 crores has already been sanctioned. So that's an 80% disbursal rate for something which is just 3 months old. So I'm very positive on SBI. Also, I think the PCR being very high, the credit cost could decline between 60 to 80 basis points, which could translate into some big upside in the bottom line for SBI. Also, outside NCLT, we are seeing a lot of resolutions happening through ARCs and others. And I think this NBFC market share would be grabbed by obviously the private banks and the top two PSU banks. So SBI and BOB for us are top picks. And if you, I keep remembering this 2003 to 7. When we had the last good phase in the market, SBI actually outperformed the private banks, including HDFC.
Gurmeet, would you be comfortable buying Axis right now? I heard you at the start of the market. By the way, I must also mention, just before we do that, Axis is just slipping into the red. The Nifty Bank at 272 points is now trading at the lowest point of the day. So the index has come off and it's dragging the Sensex and the Nifty along with it. Sensex down about nearly 270 odd points as well, and the Nifty about 80 odd points. So we're trading now at the lowest point of the day. But before we talk about the Nifty Bank, since you're asking Gurmeet about Axis, would you buy that? The commentary from the Axis management and the brokerage reaction to those 80% ROE numbers and a few other points that they pointed out was pretty heartening.
Yeah, so Neeraj, while 18% in 3 years ROE is ambitious, definitely. But I think with Amitabh Chaudhary being there, I have a lot of colleagues, friends, ex-bankers who work in Axis, and I think there's a big turnaround happening in the culture. And what determines in private bank is the culture. It's the leadership makes a big difference. Axis obviously has a great base. Its liability side is literally untouched in terms of the third-party distribution to do. Their Burgundy channel, which is something which is very similar to the Citigold or Stanchart Privy, which is the wealth arm, is doing splendidly well. Great focus on CASA, great focus on some of the operating metrics in terms of the way they are tracking business. So I'm very positive on Axis. And as I said, they on the liability side, for example, the highest defense accounts are with Axis. The highest number of saving salary accounts or traffic police is with Axis. So Axis is on a huge book when it comes to the liability side and very, very underpenetrated. So what it can do with the fee income, the FX income, the trade income would really surprise. So I would actually rate Axis very high in my buying list in the banking space.
Yeah, but today might not be the best days because the Nifty Bank is just coming off and now trading at the lowest point of the day. Jay, you want to come in? Nifty Bank now at the lowest point. If hypothetically you had a long trade which you were carrying on because you believed that there will be higher levels, because of this downtick, would you take some money off the table?
Oh, definitely. And, I would be prepared to buy, Nifty Bank around 29,000, around 29,000 mark. Because it's come to the round number, and those round numbers are usually psychological numbers. They are not actually resistances. So the market is actually taking some profits. The smart money is probably booking some money. So it's sensible to take some profits. So I would think I would see if there's a pullback around the 29,000 mark. That will be a good entry point. That's quite a deep correction from current levels, about 29,500. But corrections usually tend to surprise. So be prepared around 29,000 to 28,600. Whether or not the market comes there is a different point. But I think the baton is getting passed from the leaders, ICICI, Axis, to HDFC, IndusInd, and Yes Bank. So, and HDFC Bank has actually had a huge breakout with volume. So if it were to come back closer to 2150 to 2200, that'll be a great entry point. I think it's heading for 2500.
Okay, got that. Time now to take a look at what dealing rooms are recommending this afternoon. Darshan Mehta is here with his channel checks. Good afternoon, Darshan.
Yeah, good afternoon, Devina. I think across the board we're seeing selling pressure that's coming in on banks. A couple of dealing rooms did indicate that there is enough fund selling that's happening across banks, be it the private sector banks or the public sector banks. You're seeing heavy selling that's coming in the likes of HDFC Bank, which has been one of the front runners as far as the banking rally is concerned. Again, IndusInd Bank, after a good run, is seeing selling pressure. SBI is seeing selling pressure. So across the board today, banks as a pack is seeing selling. The stock that probably dealers believe the momentum will continue is SRF, trading at a 52-week high, almost near 2,500. Dealers anticipate that this time around the fourth quarter numbers will be extremely strong. There is heavy accumulation that's happening, so there is active interest there. And one of the reasons the Nifty is cracking is because Reliance itself is down over 2.5% in trade. Some of the foreign funds are active sellers in the counter, so the almost 2.5% drop in Reliance is causing some bit of pressure on the Nifty also today.
Certainly showing, and after some days we're seeing Reliance Industries be under pressure. Darshan, thanks so much for putting that into perspective. And that's the other big talking point, isn't it, Brijesh? While we're talking about what's happening to banks, etc., Reliance Industries, the big boy, is showing some chinks in the armor today. Normal routine profit booking, you reckon, or can this deepen a bit?
If I'm not mistaken, the previous swing 52-week high was somewhere around 1320, and I'm looking stock should not break this 1320. Even now, if it breaks, then the important support lies somewhere around in the range of 1270 to 1280. So again, if someone wants to go for a long side, either keeping a stop loss of 1320, look out to buy at present rate and play for the target of 1360 to 1370. If someone wants to go for a investment point of view, with the list risk reward ratio, then keeping a stop loss at 1270, anything below 1300 can be used for accumulation purpose. The time frame for the investment would be somewhere around 6 months plus, and I'm looking stock going to the level of back to the level of 1500 plus.
Okay. Anything else, Jay, that you've noticed in the last half an hour to 45 minutes of trade that has somewhat grabbed your attention in any form of manner, either on the short side or on the long side?
Yeah, I had discussed JK Lakshmi Cement a few weeks back, and that's actually looking interesting in today's session. And I just want to leave a marker for people. Castrol is actually doing okay in today's session, but people might want to keep a level of 170 for it. Once 170 is crossed, I think that'll be a huge breakout for the stock. And probably for the last 15 minutes basis. And there's something seems to be going wrong with Bank of Baroda. So probably you might want to carry a short today, buy back on Monday kind of strategy on Bank of Baroda.
Interesting. And banks are looking weak. PSU banks not to be left out either. What is looking very strong though is NTPC. It's now, I was talking about it at the start of the show, that was showing this move which was trending, and that continues. So you look at the chart and say for a brief moment here and there, the stock has not shown any kind of weakness. It's moved up, it's stayed higher, then it's moving higher, and it's closing virtually in and around the highest point of the day. It's a very strong move on a day like this in NTPC. I know Gurmeet, actually we spoke to our technical experts. I don't think we've spoken to Gurmeet about this. Gurmeet, NTPC or any of the other power names as well. I mean, not just NTPC. I think select power names are doing rather well for themselves today. Would you take a bet on this beaten down space as a contrarian play, or is it this is not a good time to play contrarian?
So Neeraj, actually may not be a bad idea at the price point. It is 10-11p, 5% kind of a dividend yield. And I think while the news is, I don't think so, still confirmed in terms of the PPA being revised at 12 to 14% ROI, which was being a bit of an overhang, might be good news. And I think what we have done is that there's a lot of special situation funds which have come up across MF and AIF categories recently, and I think it's best to play telecom, power names, some of these select metal names, maybe tier 2 PSU banks through that route, because it's a momentum tactical trading play, and you have to be good in terms of your entry and exits. So we prefer doing that, and a small part of the portfolio, maybe 10-15% could be aligned towards that. But at this price point, 6 to 12 month view, considering there is a bonus issue due, so what you would also see is that this is technically the last bonus issue for the year. So a lot of people will also get in terms of bonus stripping, in terms of offsetting their capital gains into this. So too much movement should not be read with proper fundamental news being in place.
Well, just about 12 minutes left for the markets to shut shop. I know Jai Bala just spoke about BOB, but if we can, let's get in closing strategies from both, and maybe ask Jai if BOB is the only one or does he have something else. But Brijesh, to you first, your top closing strategy for the day.
No doubt, as you have spoken to about the NTPCs, the charts are looking promising, and spot somewhere around 135 the stock is being quoting, so one can look at to buy with the strict stop loss of 32.5 and play for the target of 140. In cement, Sri Cement is looking good, somewhere around 18,090 or say 18,100 the stock has been quoting, keeping a stop loss of 17,850. One can look out to buy for the target of 18,800, and even the target can be extended to the level of 19,000. And there is a one sell call on for Sun Pharma on shorter term time frame. The stock has made the lower highs formation, so somewhere around 473 the stock has been quoting in cash, so one can go for a sell side with a strict stop loss of 478 and play for the target of 462, 463.
What about you, Jay? Is it BOB or is it something else too?
Yeah, there is something else too, the market, but it's always the capital that's limited, not the idea. So, looking at not just Sun Pharma, Brijesh mentioned about Sun Pharma, there's something wrong with all the Suns. Sun TV is also cracking, and that doesn't look good on the charts. So probably another STBT with a stop above 610 for Sun TV. Probably, it will open weak on Monday morning too. And just as a FYI, ever since we started speaking about the CNX IT index, if you look at the intraday charts, the last 15 minutes, the CNX IT index has been spiking up. So that's probably another point to note. Probably what is a positional strategy can turn out to be a buy today, sell tomorrow.
Okay, so those are a couple of strategies from our experts. Actually, not a couple of strategies, 3 or 4 names brought out. Look at the stock NTPC. It's just on a roll as we start winding up. Last 10 minutes of trade left. You that one stock that is really rocking the charts. But while we've been talking about the gainers, what about the losers? One of them is, of course, Reliance Industries, and yes, that's looked wobbly. At the broader end of the spectrum, Buildcon has pulled back, Indiabulls Real Estate has pulled back, and Motherson Sumi at 147 is down about 6% as well. So looking slightly weak. Actually, this whole conversation about autos, the conversation around auto ancillaries kind of fell by the wayside. Gurmeet? They got beaten down, they were trying to go back, and now we have this lurking auto slowdown. A bit of a double whammy, so to say. Do you reckon that some of these auto components, global or local in nature, would have a tough time over the next 3 odd months? Valuations may look attractive. Would it be prudent that even if you want to buy, do an SIP kind of a strategy here? Don't necessarily go out and buy all of them in one go.
Fully agree, Neeraj. I think, and I still think that, reiterating it, I think a lot of pain is in the price. Motherson Sumi also, if you see the performance, it's been a little disappointing for a stock like it. I think the only one which has done well post announcement of some acquisitions and technology type is Minda. We have discussed that. Even Bosch has been under pressure after the news came in that the Indian business will be the face as far as the the EV thing goes. So I think one key trigger, Neeraj, would be the electric vehicles, the EV launches. I've been speaking to a lot of friends who work on the product side in a lot of top car makers. something in 3-4 months could come up, and I think that would be a key trigger. Also, I think this entire slowdown is a little overblown to my mind. I agree there are production cuts, there is considerable number of days the inventory has gone up, but I think there is a lot of pent up demand in the system, and I think once the things will turn, it will not give you much time to enter. So you rightly pointed out, just keep buying the dips and be patient. We've seen that with banks last year. We've same probably goes for some of the quality NBFCs and auto ancillaries.
All right. Some metal and mining stocks also under some amount of pressure. NMDC for one is down in the session. Nalco 2 is looking weak. NMDC is down 6% now at 106. Nalco is down 4% at the lowest point of the day. Brijesh, Singh, you track any of these two?
See, Nalco is looking weak. NMDC, I would not be suggesting it is looking weak. It's a sort of a profit booking. So till stock doesn't give closing below 102, we would not be going short. Right now at 107, anything somewhere around 105, one can take a buy call in it for NMDC and with their stop loss of 102 and play for the target of 112 to 115. Nalco, no doubt, chances are that the stock might try to touch 51 or even 50 also, if it doesn't give closing about 55 rupees 20 paisa. So one can go for a sell side with a stop loss of 55 rupees 20 paisa and play for the target of 50 rupees to 51.
Okay, that's on Nalco, which is looking weak in intraday trade. What else is looking weak? We spoke about Motherson Sumi and Indiabulls Real Estate. Tata Motors has come down as well, about 3% right now. So, just a few weeks ago, you actually saw a pretty smart move on Tata Motors, which brought it to levels of 180 odd. But from there, it's been a swift retracement at 175 now for Tata Motors. That too is at the lowest point of the day. Bala, would you trade Tata Motors?
See, autos are in a bit of a spot, and I had mentioned sometime, I don't recall exactly when, but I had mentioned that the lows that Maruti registered was not a convincing low for me. And, so basically that's the leader within the auto space. But I would think that Tata Motors had actually put in an important bottom at about sub 140 when the headline number was poor for the stock. So I would think the Tata Motors in particular is just going back to retest the lows, but I think the low may be in. So you might want to wait for a pullback to get in. I would tend to think that Maruti will go below the February low, but it will be just a brief intraday breach and a reversal. So until that point, you might want to wait for buying Tata Motors because Maruti seems to be leading the auto index. And so that being the case, you might want to wait for getting an entry point in Tata Motors. But I think the bottom may be in.
Okay. Gurmeet, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time and your ideas as well. Have a good weekend. Just one final thought on stocks which are correcting. And Bala, quick 60 seconds on the auto ancillary stocks which are looking weak. Motherson Sumi, starting with that's down 6%. Either that or something else that might be top of your charts.
Yeah, Motherson Sumi, I would say, the bottom is in for the stock. If you look at the movement from the low of 128 in October to 173, it's just facing resistance of the 200 moving average. I would call this a long-term reversal for the stock, and this is a correction to the initial move. So I would look to get into Motherson Sumi around 140 levels. So, and then the next leg might be more powerful. I think Motherson Sumi is heading for much higher levels.
Well, let's wait and watch. When does this corrective move stop? Though down about 6%, it's ending at the lowest point of the day on volumes, which are substantially high as well. There is price and volume action in Motherson today. Stay on, gentlemen. We'll take in final thoughts from you. But here's how the markets are shutting shop. Not too well, I'm afraid. Not at the lowest point of the day, though. I must keep that in mind. The Nifty Bank was almost 1% down. The Nifty was down about 0.7%. We are off the lows of the day, which, well, you can look at it positively too, but ending in the red. The mid caps and the small caps, and wonder how much damage happened there in the last 1 hour. Well, reasonable size of damage happened out here too. The market bet was anyways not looking great, and now it's wobbled maybe slightly more. Maybe it's 2-1 in favor of the declines. We'll get to that. Let me talk about the large caps first very quickly. What's moving and what's not. The gainers, NTPC right up there, about 4.5. Larsen & Toubro another 1.5%. But then it's all varied, from commodity names to IT to power. it's been all over the place today, and Titan very close to nudging the 1 lakh crore market cap mark. Doesn't quite hit there, but not a bad day. What's not done well? OMC's again correct. So BPCL, HPCL have some losses. Reliance was the big reason why we had pressure in the markets. Add to that the Nifty Bank not doing well and losses to a lot of banking names, SBI in particular, and Maruti continues to grind lower. Frankly, if you're looking at the losers, oil marketing companies, Maruti and Reliance, those three stand out as the pack of top losers. You could even throw in a State Bank of India out there. But the mid caps, Devina, while there were high flyers on the gaining side, more losses than gains.
Yeah, and that's clearly evident in the market breadth, which will come up in just a few moments. But we're going to quickly run you through the individual movers. We all know that the indices have failed to impress in today's session. A day of consolidation, a slight profit-taking bias that we've seen. Individual counters, then RCom for one is done well in today's session. Last 2 to 3 days has been clocking upper circuits, and today is no different. The stock's up 9% yet again. Real estate is very, very active. So this entire week was characterized by interest in the real estate pocket. You've got Prestige Estates, which is up heavily, about 6% odd, cooled from the day's high, but still a good 6% higher. DB Realty, Godrej Properties. These are the kind of names that we're getting in terms of gainers. Even Oberoi Realty has been up about 4.5%. Godrej Properties, remember, a significant 8% move on Wednesday's session, and add to that today's move as well. Some stocks, some other stocks, Heidelberg Cement is the other one. That stock in today's session is not doing all that badly, so about 4.5%. But Rampur Chini has gained some traction, and within the aviation pocket, you're going to be watching out for what happens to Jet and SpiceJet. Jet, for one, has regained some lost ground in today's session, about 2.5% higher. It's not yet closed for the markets, but more likely that it's going to close with these gains. SpiceJet, on the other hand, a big move coming in there. Wednesday's session also saw a big move. The possibility of them taking over some of Jet's grounded fleet, that is up about 8%. Amongst the losers, Motherson Sumi not having a good day. You've got NMDC, Nalco Metals and Mining looking slightly more weak this afternoon. Dilip Buildcon, some more profit taking, 2 straight days in a row now for Dilip Buildcon, that's down. And Indiabulls Real Estate, the outlier in the real estate pack, that has not been doing a whole lot much in today's session, that's down a big 6%. So that's what we've got in terms of the close for the day. Both the indices, the Nifty is the Sensex down about 0.5%. Bank Nifty looking worse off, about 0.8% under.
Yeah, and the market with it too not looking all that great. Just the volumes before we talk about what the week has looked like. Market breadth, of course, 2:1 in favor of the decline, so it's turned out as we kind of mentioned. But yeah, the volumes picked up. They, both F&O as well as cash market volumes on the higher side today as well.
Yeah, taking a look at the weekly performance then, because that's going to be crucial to stack up how we've done vis-a-vis the last few weeks. The last week we were up about 2.5% on the index. This week, after today's dip, we are flat for the week. The gainers, though, you've got a good move coming in. Infosys about 5% higher. Hindalco does well this week. Dr. Reddy's, Indiabulls Housing Finance are amongst the top gainers. Not all that good for the oil marketing companies. So you've got HPCL, BPCL, both of them down under about 6 to 7%, and a big 5% knockdown for Maruti Suzuki.
Yeah, and the mid caps and the small caps, let's bring those up. Real estate should be dotting the gainers list. Prestige Estate certainly there. Actually muted if you frankly just look at a 7% uptick with I thought they would have done much better.
I'm surprised Godrej Properties is not on this list.
Yeah, well, maybe been on the index, maybe not in the mid cap 100, but Jubilant Foodworks, the upgrades coming in from brokerages. Edelweiss, some very strong moves the last few days. So interesting, and LTI in the thick of things, at least in terms of news flow, right out there amongst the top gainers too. But the
small caps.
Yeah, the small cap space, Sobha features out here. The gains seem muted on a week basis, on a 4-day basis, but interestingly, a lot of stocks in news out here as well. On the losing side, Ashoka Buildcon, Just Style loses out, and Jet Airways amongst the top losers as well. Well, final thoughts from our experts. Brijesh, in light of all of this, what's the level for the Nifty Bank that you would watch out for?
See, if I talk about Bank Nifty, no doubt there would be a chance that on Monday we'll try to see Bank Nifty touching a level of say of 29,400 or say 29,420. But I'm assuming that we would not be breaking 29,300 or say or a safer bet 29,250. And after that we can see a bounce back, and that bounce back can take Bank Nifty back to the level of 29,650 to 29,700. If I talk about Nifty, Nifty has a support at 11,420 or say 11,400. This should not be get broken. Anyhow, if it had been broken, then 11,255 or say even 11,370 are the two crucial support level. From there, we can see a bounce back.
Okay, got that. Bala, your closing thoughts?
Yeah, I would wait for the Nifty to dip somewhere close to 11,300 and look to buy that. And I would look for sector rotation opportunities, which the stocks that the sectors that have performed well, like the banks and the frontline names like Reliance and all those things. They're likely to take a breather, and IT stocks which have been pulling back lower. That'll be the ideal point to keep your eyes on. Something like Hexaware, Infosys. And they are looking at the only thing that's a little bit of a bothering spot for me is actually TCS, but there is also a very bullish interpretation for it, but right now I'm not taking that. Barring TCS, everything else in IT looks okay.
Okay, gentlemen, we leave it at that. Thanks so much for joining in, Bala, as well as Brijesh Singh. And with that, it's a wrap on this edition of Countdown from Neeraj, myself. The entire team has put the show together. Thanks a lot for watching. Have a great weekend.